Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade today. We'll also help you understand the expert action as far as some of the stock picks are concerned, the top ideas in the markets that you can chase right now. But first up, a quick check on how the markets are doing at this point in time. Now, first up, the Nifty. Right now, it's trading with 134 points of a loss, and the Nifty has also slipped below the 18,500 mark. That's a cut of almost 0.7%. The Sensex also has slashed by 525 points. It's trading now at 62,445. Remember, this cut comes out in today's trade. Asian Paints and Tech Mahindra, the other movers at this point in time. But let's welcome our guest on the show. Ajit Mishra joins in. He's the Vice President of Technical Research at Religare Broking. Welcome, sir, and thank you so much for taking the time out for this discussion. I want to first begin by understanding from you 500 points of a cut on the Sensex today, and that's after we've been seeing a good bounce in the markets for the last few trading sessions. Is this something that you are clearly watching out for as something that could extend into a deeper loss, or is this just a factor before the expiry that we are seeing?
Yeah, good afternoon, Sakshi. Sakshi, yes, we are seeing a bit of pressure in today's session, which is normal considering that we had this 2 weeks long consolidation earlier, and of late we have seen this breakout from the market. But what we have been observing, of late is that the lack of decisiveness at the global front is somehow capping the momentum, and it was select pockets, especially from the banking and financial space, which was helping the index to hold. So, and today we are seeing that the banking index, after making a new record high, is also feeling the heat. So we feel that the tone is positive. Positionally, if we talk about, there's nothing has changed as such, and we feel that this will remain so until we see index, slipping below 18,250 mark when it comes to the Nifty index. And for the banking, it's close to around 43,500. So these are the key levels that one should keep a close eye on if you are a positional trader. Intraday, we see that these kind of volatile swings will continue, because as you rightly mentioned that we have weekly expiry also scheduled, and plus the US market is also not signaling anything concrete so far amid this deal talk. So we feel that this kind of volatility will continue, but yes, positionally we still have a positive view on markets.
Okay, positionally, you do have a positive view on markets. If you could expound that further, specifically on the Nifty. Now, we did see Nifty breaching that 18,600 level, almost reaching to those all-time high levels of 18,887. The Nifty Auto, banks, FMCG, small caps, mid caps, all of them hitting fresh highs, the Nifty Bank as well. What I wanted to understand is that 20,000 mark still looking achievable as far as this current calendar year goes for the Nifty?
So, see, 20,000 seems like a bit difficult in this calendar year, considering that first we have to, see how the global markets are going to pan out. Because yes, we have outperformed the global market of late, but we largely trade in tandem with that, and plus it's after like 2 years of consolidation, it's not going to be like a single way rally that we are expecting in the market. But yes, 19,500, 19,400 zone seems achievable during the financial year. And in case if everything goes good when it comes to the US market specifically, then obviously then we can see much higher levels also. But as of now, I guess 19,400, 500 is something that one can look at from the financial year point of view.
Okay. Now, what is it that you would be advising investors, and take us through some of the sectors that will particularly do well now going forward from here? Could infrastructure be a big bet, considering that we are just months away from the general elections now in India? Or are there other themes? Should one stick with the banking space that has outperformed so far? Any other themes that you think that now can outperform in the markets?
So yes, sectors, if you have noticed that in the last 2 months of recovery from 16,800 to currently around 18,800 levels, four sectors which have clearly outperformed the market: the banking, financials, auto, FMCG, and selectively, yes, from the other spaces also we have seen a bit of participation. So if you talk about outperformance, I feel that these sectors which are leading, usually we have new leaders, when the market witness a new cycle of up move. So these sectors can remain in the forefront when it comes to the outperformance. And if we talk about, let's say, from a year of point of view, at the same time, what things have changed and which has improved largely is the recovery in the laggards also. So like now we are seeing pharma also pitching in, IT also pitching in. So if we talk about sector preference, then the leader should be preferred. But yes, selectively, as we are seeing that now markets are offering opportunities, across the sectors. So selectively, one can look at IT and pharma basket also. Infra as a space, I feel that somehow in some of these like pockets like railway infra, we have already seen very strong surge. And then we had like, counters from the capital goods space also, wherein we have very strong rally. Before numbers, post numbers, we are seeing a bit of profiting consolidation. But metals are slightly subdued still, and there's a possibility that this underperformance might continue, is what charts are indicating. So in infra space, one needs to be selective, and the preference should be given to the leaders.
Okay. So when we talk about specific stocks, which are some of the stocks that are coming on top of your radar right now? Are there any stocks that you can definitely look at creating alpha in this current market, whether or not there is volatility, whether or not the markets perform, and give you those double-digit returns? Can you hope for some of the stocks that can definitely give you that push in the portfolios?
Yes, certainly. So, like as we were talking about like four sectors: banking, financials, auto, FMCG. So, from the banking space, I feel that excess now has the potential because ICICI have already made a new record high. We have seen recent recovery in SDFC Twins also. So, excess, we expect a catch-up move, and it's still at around like 10-15% down from the record high. So that also gives you comfort that the banking index have recently made a new record high. So in the next leg, Axis can catch up with the other banking majors.
Okay.
From the telecom space, Bharti Airtel is one pocket where we're seeing consistency, and as you rightly mentioned that there could be a bit of a turbulence in between. But Bharti is a very stable and very gradual mover. So we feel that the kind of consolidation that was needed earlier, it's already done, and it's set for a new high. Then from the auto basket, Maruti, we feel it has its own set of uh, uh, phases wherein we see consolidation. So that also seems over. And Tata Motors also surprisingly can do well from the current level after spending nearly 1 year of consolidation. So these are some of the names, and from the FMCG basket like Marico, wherein we see potential from the current levels, and HUL also looks good to us.
Okay, so you've actually given us a variety of stocks from banking space, auto space, even the FMCG basket as well, and Bharti Airtel from telecom. All of these stocks can definitely be on investors' radar, and you do expect about double-digit kind of a return in the medium term for all of these stocks as well. Apart from this, I also wanted to take your view on some of the other stocks. Like if you track the Adani basket, could you give us a sense of how should one really look at these stocks? Again, there is some movement. We are seeing that the SEBI's consultation paper has mentioned that there should be there is need for greater clarity, greater, kind of guidance coming in from the foreign portfolio investors as to how do they invest in the Indian markets. We've been seeing negative reaction for most of the Adani Group stocks today. Only the Adani Enterprises stocks is actually bucking up the trend right now. We've also seen recently the earnings come about. Adani Ports also reported its earnings yesterday. Most of the companies have actually reported decent set of numbers this time around. How have you been looking at this basket, and what would you really suggest to investors?
So honestly, actually for almost decent period, we were not recommending our clients to take any fresh bet, considering the kind of volatility that we were seeing in the entire group. And now we are seeing a bit of a stability, and this price moves are accompanied with a decent amount of volumes also. So, but still we feel that one needs to be selective, and wherein Adani Ports, Ambuja. These are the two names which I feel that have potential to buck the trend in case if again we see some volatility in the group, and plus the kind of range or the volatility usually what we were seeing earlier. has also reduced considerably, across the group counters. But we feel that preference should be given to these two names if somebody is looking to trade or invest into the Adani Group of stocks.
Okay, understood that. What about Reliance Industries? This stock has been showing some kind of a move. Today, there is some pressure on the stock. How would you, advise investors to trade Reliance now that it's like closer to 2,500? We've also seen about, levels above this as well. In the near to medium term, how should one really be positioned on the stock?
So, in fact, apart from IT, we all know that Reliance have not done much, especially in the last 2.5 years when it comes to the price moves broadly,
Correct.
hovering in the band close to around 2,800 band, and it's currently in the middle of that band. So, if you see from 2020 to till date, investors have not made, much of the returns on their capital. So, I feel that we had a similar kind of phase, earlier also in Reliance, and next 2-3 years we've seen phenomenal return. So it's a kind of a phase that it might continue until we see that something happens and the stock manages to hold 2700 mark decisively, which seems unlikely. So I feel that even in the near future, that's why we're not mentioned Reliance, at least if the view is medium term, like from 6 to 8 month kind of perspective. So that might continue to underperform the markets. But yes, the situation may change in case if we see the stock reclaiming and sustaining 2700 mark decisively. Otherwise, we have pockets wherein we have just discussed have potential to do well, and Reliance. It can be a bet to accumulate on dips instead of for a short term to medium term perspective.
Okay, understood that. Well, thank you so much, Ajit, for being with us on the show and discussing with us all those insights about the markets, the sectors, and the stocks that one should be keeping on their radar in this current setup as well. Many thanks. Great having you with us on Business Today TV. Let's take a look at how the markets are doing at this point in time. Slight losses have been reduced that exist for you as an investor. All of those things will be coming up on your screen, so don't go anywhere and don't forget to subscribe to this channel. You can also continue to engage with us on our other social media platforms like Facebook, Twitter, LinkedIn, and Instagram. Until then, thanks for tuning in.